Hello, everyone. Welcome to Wednesday Crypto Coaching. We're in week 4 of 6 weeks Unit Masters program. So already halfway through the journey. And by now you should know the basics already of how incentive systems work in the blockchain economy, who are the different players or contributors to the different ecosystems, who are the big protocols in the market when we look at CoinMarketCap. And today, what we will do is we look in depth and look at a few projects, some of the bigger projects, and try to understand what do they actually do, what kind of business models do they have, and what does it mean for society? Like, why is their product a little bit different than what exists in the market right now? Or in which way it's actually not so different, and it's very similar, just using different technology. So in week 4, we actually look at centralized or decentralized exchanges. We look at stablecoins, decentralized finance, which is a big sub-industry within the blockchain economy, and NFTs, gaming, and the Metaverse, which just came up like about a year ago, and right now are very, very high in demand. So the exercise that we will discuss today, and we will have 2 breakout rooms. We will mix participants again. You will have 8 minutes in each breakout room to pick a project of your choice. We'll have around 3 or 4 or 5 people in each breakout room. So hopefully some of you have done the assignments and present to the others how they looked at the different projects. If nobody has done the assignments, that's fine too. You can go on coinmarketcap.com and then pick one of the different projects and try to understand what are they doing. 8 minutes should be sufficient if you work as a group to spend like 3-4 minutes on researching and then 3-4 minutes on discussing the insights. Right. The questions, and these are just guiding questions, can answer all of them or just focus on 1 or 2 of them, is what service are they offering? Like, pick one of these big projects and then see how do they actually make money? What's their revenue model? You know, who are the typical users or customers of their product? And what do the customers actually use the product for, right? If they use an exchange, why do they use the exchange? Or if they use any of the other products, what problem actually is the service solving for them? What job is the service doing? And when did this project come around? Who created it? By whom? Do we actually know it, or is it anonymous? And if you have time, think about how would that project or that service offered make society or economy a better place? You may have some answers to that, or you may not have some answers to that. And then also, if you have time, look at a few key influencers or anybody who has been either opposing or supporting these projects, and understand what makes them support, what do they say about it. And hopefully we can then come back and hear 1 or 2 presentations, and then we go to a second round of breakout rooms where we pick another project. And then we do the same again. So you will have time to discuss 2 projects in today's session. Let me open the breakout rooms and see. So let me do that. And off you go. Okay, hi guys. I know 8 minutes is not a lot of time, but I hope you still had some good introductory discussions. We will have a second round, but in between, I would love to invite whomever felt like they learned something and they want to share with the community about some project of their choice. Then please, now this is the time to do it. Yes, we learn basically what we try to learn also in these unit coaching sessions is to just prep discussion and conversation, because the goal of this program is to gain conversational literacy about blockchain topics, right? So that's why we keep the breakout rooms short, so everybody can speak a little bit, but not too long. And then we have another round. So yeah, it was just getting juicy, exactly. But the goal is that you will get to the juicy point already in 2 minutes, not only after 8 minutes. So anybody want to share 1 or 2 insights that they learned, or what they just discussed about which projects? Tell us the juice part. I don't know. Whoever didn't get the chance to elaborate on the juicy part. Which projects were you guys looking at in the breakout rooms?
We were looking at Illuvium.
Which one?
Illuvium. It's a new game that actually hasn't been released yet.
Ah,
but it's already
okay.
gained a lot of traction.
Small caps. Okay. On which chain?
Good question. Ignacio, do you know what chain it's on?
Ethereum. Okay. So what was so special about that? Who proposed that, and how did you get to that? Ah, Ignacio. Okay, I understand. Okay, do you want to share a little bit about why you picked that project and what should we kind of know about it? I can't hear you yet. You can't activate the audio. Is it because we have some settings?
No,
Okay.
no, yes. Okay, thank you. Yeah, it said that I couldn't activate it myself. Okay. Yeah, well, I am investor myself in Illuvium, so that's why I picked it. It's one of the biggest gaming market caps right now. I think only surpassed by Axie Infinity. And it looks great. I want to play it. Like when it's released, I really want to try it, because it's like a new Pokemon style game where you catch these creatures in this immersive metaverse where you can own these creatures and then fight with other players and earn money while doing it. Probably also spend some money, because you will have to invest some of the money to be better, but then you can earn money while you play. It's like a play-to-earn ecosystem. Yeah, the project's still not launched, but it has a lot of hype in the crypto community, in the gaming play-to-earn community. So yeah, that's kind of why I picked it.
Can you explain to us also a little bit what is play-to-earn and what is so fascinating about play-to-earn? Like, how does the model or the business make money?
Yeah, like in regular games, they incentivize you with fake tokens in order for you to play. For example, I used to play a lot of Tibia in the past, and you have this world where you hunt monsters and then you earn some gold and then you buy weapons and then you keep playing. But now the interesting part is that this token is not fake. It's actually, you own it and you can trade it on like a regular outside secondary market. So it's not only in-game confidence about the value of that token, but you actually have a value that's given because of speculators, investors, and all the like worldwide community. So now you can spend your time playing a game, enjoy it, but also get the rewards of that time invested. And that rewards are not only because of your time invested, but also because of all the players that are investing their time. They are like throwing value into the game in the way of money or time spent. And then all this value is split between the investors and the players, because players will earn actually stocks of the game. That's like the ILV token. So you can have a share of all the utility and the earnings by playing the game, and also by being an investor. So it's more like in the past, game developers will have all the utility of a game. For example, Blizzard or Riot Games. There's a multi-billion-dollar business, but now the players will have a share of that revenue too.
Okay. And in which way could like game developers, but as in creatives, people who design the characters and so on in these open blockchain projects, how could they benefit from that?
I haven't got so immersive into it, but as I understand, is like they probably throw open like contests, so you can, as an artist, you can participate in fan art, and then you can might win a place within the game. Actually, they have already done it. So you as an artist can try to participate in this contest, and maybe if you're good, they will throw your art in the game and you will become part of the ecosystem and probably earn some profit because of that. Yeah, I think like that.
And typically, people who contribute to the development of these ecosystems can be rewarded in tokens, and thereby basically to become a stakeholder in that project that grows over time. I think this is like what is new about Web3 and open participation systems, that anyone who early in can already contribute could be rewarded depending on the nature of the relationship of them to the game developers or the ones who shape these ecosystems, and then they can already participate the moment that token goes liquid, and sometimes they are liquid already on the secondary markets very, very early in things like decentralized exchanges. And I hope now we go to the second breakout rooms, and I hope you have time to either speak about, a difference between a decentralized exchange and an exchange, or speak about any of the decentralized finance use cases. I will give us 10 minutes, so you have 2 more minutes. We won't stop when it just gets juicy, but just think about when you discuss or share projects, think about the bigger questions, and such as how are the different stakeholders in that ecosystem rewarded? When there is value generated, whom does it go to? So that we kind of start to look analytically at the different projects in a like economic way, not only in an investor's way. Let me open up the different breakout rooms again. And we will make a little bit smaller groups so you can also discuss between yourself and have more voice of share. I will jump into some of the groups just as a silent observer. Just don't worry if I show up. Okay, let's hear some presentations. 1 or 2 use cases that were discussed in the breakout rooms. Yes, Minhwan, please. You cannot unmute. Sorry about that.
All right, thank you, Yip. So me and my team, we were discussing about a decentralized exchange, like the most popular one, which is Uniswap. So basically the way it works is that the difference between like the centralized exchange versus decentralized, that you would basically holding your own asset and not, let's say, Binance or Kraken hold the asset for you. Also, another difference, like, let's say, quite unique about Uniswap is that they could have a thing called like liquidity pool. So the way that they would provide liquidity is through automated market maker, I believe. Yeah, true. So instead of like matching between sellers and buyers, they already have a pool out there. So if you are a seller or buyer, basically we're just interacting with the smart contract itself. And so I think we were discussing about different use cases and like even, but I don't recall right now. But basically that's the gist of the project.
Okay, so what's the main difference between a DEX and a centralized exchange?
So the difference is that centralized exchange, we would rely on one entity, which can be Binance, which can be Kraken. They would act as the middleman that matching users and buyers and sellers. Whereas in the centralized exchange, it's trustless. You don't trust anyone. You have your own custody of the asset. Nobody hold it for you. You basically hold it yourself. and you could have full control over your asset. But then at the same time, you would have to be quite careful, because if you connect your wallet with a bunch of different things, your asset can be basically hacked.
Thank you very much for the recap. So where does liquidity come from, for example, when you use a decentralized exchange such as Uniswap? We can also have a look together here. So when you go on CoinMarketCap, you see like the largest decentralized exchanges. When I click here, and like Minh Hoang said, Uniswap is like the largest one at the moment. They have 5% market share, and they have a $3 billion daily volume that is being traded. So where does all this money come from?
Is that a question for me, or maybe for everyone?
For everyone.
Yeah, I will let everyone answer then.
It comes from the same users, yes.
Yeah, we're speaking about decentralized economies. Uniswap in itself is a protocol. And Minh Hoang already said it's an automated market maker. So there's some program that basically defines the price of the different assets. So you typically put 2 assets into a pool. Like you can see here, there's like an USDC, which is a stablecoin, US dollar pegged stablecoin, and a wrapped Ether. Why is it wrapped Ether? Because sometimes when we discussed in week 2, the different blockchains are like separate ecosystems. When you want to use Ethereum on a different chain than Ethereum, you have to wrap it so that you can deploy it on another chain. Right? So here we have a few different pairs. So you typically put $1, like 1 unit of this asset that you want to put, and 1 unit of this other asset, and you provide liquidity in equal parts, but there's different models. That's the main model, into a liquidity pool. So you send money from your wallet, where you basically access your funds on the blockchain, into that smart contract, into that liquidity pool. And then people can buy on it, and that liquidity pool. How does the fee model work? Did anybody look into that? So typically what happens is, depending on the protocol, there's some kind of exchange fee. And who now earns that exchange fee in a world where there is no central entity owning that? Right? So it gets redispersed to all the people who provide liquidity. All the people who provide liquidity, like typically proportionally to the amount of liquidity that you provided. Because why is liquidity such a big deal when we speak about, in general, about economy? I'm just curious to hear anybody's views on that. Like, just imagine you issue a token, right? Any YIP token. And then what's next? I issue 100 YIP token. I can do that nowadays on Binance Smart Chain or on Polygon, like super easy. It takes like 3 minutes. But then I have a token, and then what? Yeah, Alexandre.
Well, I guess if you don't have any new buyers, then you won't be able to sell, because you need to have a counterparty to sell your token.
Exactly.
So yeah, so that's when liquidity is key. The more users you have, the more easy it is to exchange and sell and express your interest in the project.
Exactly. If you don't have a lot of liquidity, it's like an illiquid asset. When you basically want to sell something and nobody wants to buy it, you have to go very, very low down in price, right? So there's a lot of price impact. So when you look at liquidity, the problem is when you are a small project, typically it's very difficult to gain liquidity because you need people to put pools so that others can trade against it. You need to find counterparties, and obviously this is not like a manual exercise, right? All of this is in the collective scheme. There's market mechanisms for that. But it's very difficult at the moment, in general, when you're a small project, like a startup project, to do fundraising, right? It's just like you go on crowdfunding, and then you just need to create some kind of liquidity. You need to create your own market. And that's the same problem that we're seeing in the crypto markets. In order to be listed on the bigger exchange, it costs a lot of money. On the centralized exchange, like Binance, KuCoin, and so on. Why? Because the moment you're listed on these, a lot of liquidity, a lot of people want to buy and sell your token, and there's a lot of trading happening back and forth. But if you're a small cap, you can go on the decentralized exchanges, but somebody needs to provide the liquidity to that. In the decentralized worlds, there are incentive mechanisms to incentivize people to contribute to that liquidity pool. And the incentive mechanisms are typically in percentage of whatever you put in. You get, like, whenever a transaction happens against that pool, you get a share of the revenues. And this is how basically Web3 algorithmic models work. And then there's many models like Uniswap and so on, which was the first that was a bit reputable. They came on the market last year, I think, August or something like this. And now there's, for every chain, basically, there's a different model similar to Uniswap, because Uniswap is mainly on Ethereum. And then you have PancakeSwap for the Binance ecosystem. So what you see on the market in general is one concept is working on one chain, and then on the other chains, other ecosystems, people are just copying and duplicating the same models and maybe making it a little bit better. And why it happens so fast is because most of the code is just open source. So you can just copy it, twist it a little bit, and deploy it on your own blockchain. And of course, that comes with a lot of risk, because sometimes people copy and paste the code, and then they do mistakes, and everything is still a bit shaky. But this is how early we are in the ecosystem. And these decentralized exchanges, they hold a lot of volume. Right? We're not talking small volume. We saw 3 billion in 24-hour trades, or I think it was, we see that. Yeah, 1, 2. Yeah. So this is actually a lot of stuff that is happening currently in the crypto world. I don't know. We will have a speaker on Thursday who will speak about the gaming market and Delphi Digital. Somebody asking a question. Oh, it's risky for Uniswap if anyone can copy and set it up. Yes, there was a little bit of a DEX war. So people would just copy that, and then people compete for liquidity. Competing for liquidity means they give token rewards, higher token rewards for people who deploy their assets onto the protocol, right? So like when I put 100 ETH and 100 whatever other trading pair, I get a share of the fees that come in through the exchanges that are happening. And also on top of that, typically I get some kind of tokens from that from that protocol, from the DEX. And now what happens is, because they're all competing for liquidity, because based on that liquidity, they generate revenues, right? So they give you higher rewards. And then what you see is the customers, they are not very loyal, right? Most of the early users were like just people searching for yields. So they would screen the market, and then they would see, where can I, actually it's still happening, where can I get the best yields out of an asset that I give into the liquidity, because my capital is working for me, right? I worked somewhere to earn that capital, and now I want that capital to work for me. And then people just very rationally, and there's bots nowadays doing that, see where can I get the highest yields, and then they just deploy that very professionally to optimize their yields. So yeah, you will see a lot of market competition, and we can't say if it's good or bad, because it sparks a lot of innovation, and it makes people need to develop very, very, very fast. This is why innovation in Web3 happens very, very, very fast. If on the same contract, which liquidity, V3 is not open source. Thank you, Paula, for clarification. Which liquidity providers will be picked up for a trade? It's proportional to the amount you added. Yeah. See, proportionally spread out, no first come, first serve. What is that question?
I think I was trying to think, if you say, for example, your liquidity provider, and you kind of agree to a contract, and there's another one who's also agrees, another liquidity provider agreeing to the same contract. I was wondering which one is going to be picked up to get a fee from the transaction. And it doesn't make sense. Basically, you're just getting whatever as the portion of the whole, the big pie, how much you invested yourself and everybody gets something. So I think I understand now.
It's already exactly, but you might come up with an auction model to incentivize people to join liquidity pools early.
Yeah.
Right? Like some kind of
possible.
auction model, like in the way the parachain auctions were on the Polkadot chain. So like the space is still so early, so there's a lot of room for experimentation. It doesn't take much to set up these kinds of models and test them out in our world. If you do it small scale and test it, and then of course if it works, people can go very, very large. Thank you very much, Paula, and everybody else who, what would be the best or good strategy right now to launch a new token? I'm by no means an expert in that, but there's like a lot of tutorials on YouTube. Typically, it makes sense to speak with people who have launched successful tokens. There's different strategies, like there's best practices on fair token launch, there's best practices on IDO strategies, there's best practices on, just doing, I would say, private sales without all this kind of IDO. So different people, different strategies. I think you need to speak to the experts who've run successful token sales, because it depends really on the community, the purpose of like the business model of your token, and then basically need to find the right people who connect you to these communities in which basically your token would get support, a lot of support. Okay, I think on Thursday, tomorrow, we have another session. It's at 5:30 p.m. UTC, because the speaker asked us to shift by 2.5 hours. He's a game designer and community developer from Delphi Digital. Delphi Digital is a research firm and also a crypto investor. So they are very big in the gaming and metaverse environment right now. And he's speaking straight from his everyday experiences in this gaming industry. So will be very, very exciting, and very happy to see you back. And also I wanted to say, I think I confused the numbers on the trading volume. It should actually not be billions. It sounds a bit too much. The daily volume probably was millions. Okay. Thanks a lot, guys. Have a good one. It's billions. You checked it, Alexandre? Okay. Thanks, guys. Bye-bye.
Yes, even if you look at this derivatives exchange, like even on the FTX, you have like the perpetual contract, and it trades billions a day instead of the coin. Not even the coin, but the derivatives of those.
Okay. Thanks.
The volume is just massive.
All right. Thank you. And then basically what they charge is a fee on that trading volume. So you can see, like, the more volume you have, the more revenues you generate per trade, per trading volume. All right, guys. See you tomorrow or next week. Bye-bye.
See you, bye.